All right. Hello, everybody. Welcome back to the 7th edition of Robinhood Weekly. We are here today. Robinhood is currently up about 3% in the overnight markets, trading at $49.37. At one point, it got to $49.75. And it's been quite the interesting weekend for Hood, along with quite the interesting day for the inauguration. Roy, Tanner, how are you?
Doing well, brother.
Doing good. Excited that the markets are about to be open finally again.
So before we get into everything, let's just start off with the elephant in the room. Obviously, we had an inauguration today. Roy, I don't know how much of you've kept up with the speeches and stuff, but what was your raw reaction to what happened today?
Yeah, the only thing that I did basically was just read the transcript of Trump's inauguration speech, and then looked at a few other clips, including the Elon excitement / fascist salute. But and then I've been looking at, and I actually just pulled it up right before we began too. Trump is signing a lot of executive action. So there's a couple of, I don't know, like some of it's very known of what he's doing, and some of it's like, well, maybe he'll do something like specifically EV tax credit. So I've been looking for that one. But yeah, it's just I don't know. It's just a typical normal day, except we in this area are getting like 4 inches of snow, so that's not normal for Houston.
Yeah, we had snow in New Jersey, and it was a lot. But Houston, yeah, that's crazy for Houston. That is crazy.
But no, I'm not seeing anything that's indicating like mass. The other thing I'm looking for too is an executive order relating to tariffs, and I'm not seeing that other than Trump's comments. I think that spooked the market, a little bit. But unless we see something signed into action, markets can do anything. But I'm not seeing anything that derails the bull market or even, gives us another pullback. So could be wrong.
Tanner, as a Canadian, how did you see what happened in the United States today?
It was interesting. I haven't honestly gone out and watched a lot of the reaction from other people, but yeah, it's hard to give an opinion without trying to be political, right? But yeah, I don't know. Pump Trump coin. I don't know. Well, it's definitely interesting. What I want to know is, how does it benefit me? Am I going to become a U.S. citizen yet? Do I get a U.S. passport? Are we going to be using U.S. dollars? Are you going to sign in SAB 121? I think there was 8 executive orders that were signed.
More than that.
There's about 100, but 8 of the.
Yeah, there's 6 pages of executive orders that have been signed so far.
But what about the ones that he did I only saw the ones that he was actually signing there at the desk.
Yeah, I don't know if they're televising all those or not, but I mean, you can go on whitehouse.gov/news. I'll actually put it in my comments, and it has all the executive orders right there. Yeah. There's one non-order, but yeah, you'll see them.
Got you. So, but SAB 121 is not on there yet.
No.
Okay. Yeah, no, I'm obviously not following it as close as you guys, but there's a lot of stuff that doesn't affect me at all, but just trying to see what's happening in markets here.
So let's transition then to the Trump meme coin, which I think is going to be a big topic of discussion. So over the weekend, we did have the Trump coin officially launch. The now 47th president of the United States of America launched a shit coin. He has added 40 billion, or I think at this point, like $20 billion of value to his net worth. It is down 26% today. At the top, it was at 75. And why are we talking about it? Well, Robinhood listed it last night. And they had so much traffic that people couldn't even buy it when they listed it because of how many people were running to try to trade it. So I guess raw thoughts on the implications of Hood having this, and then the broader implications of crypto. I know we'll talk some crypto volumes, but Roy, let's start with you. Is this good or bad for Hood?
It's good. I mean, it's another stream of revenue. Robinhood's certainly not the only one that's benefiting from it. Coinbase, I think launched it around the same time, and I saw Crypto.com, do the same thing as well. So, and I'm sure many other exchanges too. I personally hate this. Even as a shareholder, I don't think the president should be launching meme coins. And if he did it and there's like, hey, all the money goes to charity or paying back the debt or something, like fine, whatever. But that's not the case. And then the Melania coin, which is not listed, but I don't love it. I also think this opens up the door to a lot of stuff that we don't need. Possibly we hit a market top on crypto much sooner than expected. But we'll have to see. But as far as Robinhood, like it's really good just because it's hard to imagine a scenario, especially with Gary Gensler out, where Robinhood gets into trouble and has Wells notice or whatever, else the SEC can throw at them for listing meme coins or any kind of cryptocurrency when the president of the United States is basically doing this. So that's really good for crypto over the long term as far as regulation. But I don't like the way this is done. And I have no problem with Robinhood benefiting from it. If somebody's made money off of it, congratulations. I have no beef with you either. I just wish the president was not involved in that. So,
is there any designated purpose for it?
It's a meme coin.
Yeah, but like I'm pretty sure like Gary V had like coins that were essentially tokens to then get dinners with him and stuff. Is there any sort of
literally nothing other than betting on Trump's brand?
There is one. I'll show you guys this right here. This is the price action of Trump when it was launched, and somebody noticed that, hey, if you tilt it, it looks like his profile. So that right there is the real world use. Outside of that, nothing.
That's interesting. Yeah, I feel like it's weird, right? Like how many different tools do you need to bet on someone? You got DJT. Do you need Trump? Seems to only provide any sort of benefit to the people who caught it immediately, which in retrospect, we saw it like when we were doing the SoFi Weekly. If we all just would have just stopped what we were doing and bought it, I mean, we probably wouldn't be streaming anymore.
Yeah.
But
That's true. That's true. I mean, by the way, I tried to buy the Melania thing because I missed the Trump thing, but the servers on Phantom, the app, they couldn't.
Well, the other thing this really? Signals too, and I'd love to hear your thoughts. Is we're very much risk on as far as the market. Yeah. So like that's a signal. So what do you think, Amit?
Yeah, look, I think we need to buy more Hood. I mean, like at least I'm buying more Hood. I think the volumes of crypto, given Hood's take rate is double what it is on the Trump coin than the other coins, are going to be massive. I think this Trump coin is not going anywhere. I think if Trump has some really good political win, the Trump coin is going to pump, and that's going to benefit Robinhood. Solana pumped to all-time highs over the weekend. That benefited Robinhood. We are massively risk on. CPI came in lower than expected. The 10-year's falling. The dollar is still in a tough situation, but I don't see how we're risk off. And if we're risk on, and Robinhood's going to have tough comps to 2024 numbers for Q1, if they can grow another 30% in 2025, with S&P inclusion on the horizon and the chart looking the way it looks, with the $1 billion in buybacks, if there is a massive dip that they can take advantage of, it just feels like this is going to be a massive year for Hood, along with the fact that futures aren't live. The event contracts have only been implemented once. We're probably going to get other renditions of it. Like, it seems like the catalysts are there, unless we have a massive recession and people stop trading the markets. If that doesn't happen, I think we're risk on.
Yeah, I wanted to hear what PK said as well, because I didn't get this news. I don't have the app personally. So what's the news about the expansion of the crypto take rate for Trump?
So on the Trump coin, they expanded it to 1.5%, and it's usually 0.6%. I'll try to get the picture that I posted on this. Yeah, here it is. To me, this is just like free money that they're getting off people trading this thing. So there is the spread, and it's much higher than usual.
But is that because they are going through middlemen to get this coin, or are they just being a little bit more greedy because of the rush?
Might be both. Maybe they don't get the full 1.55%, but it does. If it's that elevated against Bitcoin at 0.5%, 0.4%, they should be making more money on this.
Yeah. It is crazy expensive. What's so funny is no one's going to care because you're not buying it for a 1% gain anyway.
Yeah.
Yeah, if you're buying Trump coin, you're buying it for something more. But like here's a question I think we should post everybody. Like, how are you thinking of Hood in this environment? Because the crypto volumes, and Tanner, you can bring those up if you want, or I can bring it up on.
I got it.
But like those are, I think it was like 450 billion last night. Like, Roy, do you kind of think this is just one of those things where, all right, it's Hood's world, and they're going to benefit off this?
Yeah,
essentially
on election night with you guys. I think I said this, but I might be mistaken. That was a long night. That was fun though. I was like, man, I don't know, like the winners and the losers as far as the election, except for one thing. I was like, Robinhood and other brokers and anything related to crypto is a big, big, big winner. Especially Robinhood. So, at that point, I was glad that I shifted to a long position for Robinhood, and I've been buying not every week, but pretty close. I've now bought other things other than Robinhood this year, but until really today, and I took advantage of the 24-hour markets on Robinhood to do this. But until today, the only thing I bought this year was Robinhood. So it's very clear the trajectory of this company. It's very clear the macro that we're in. Risk on environment is very, very good for Robinhood, especially the change at the SEC. So, I think there's a lot more in this. I'm going to buy a little bit slower here now that we're going to be entering the 50s, but because I think we're above fair value at this point, honestly, even with 100% year-over-year growth rates. But no, it's well positioned.
Tanner, these crypto volumes, do you think Hood just keeps benefiting from it?
I don't know. I don't know what to determine as it's rising a lot, because it's not every single day. Like, I wonder if this is a Trump push, or which would also be interesting is what percentage of this is in each individual coin. Like, I wonder if we can just check how much volume the Trump coin has just done alone. I don't use this service. I usually am on CoinMarketCap. So, no. So this is only making up a decent portion, but not all of it. But yeah, so I would just be interested in knowing what percentage of the actual volume is in coins that Robinhood is offering versus, total market cap of crypto. The ones that we are not offering, like Melania, for example, we wouldn't get any aspect of that growth.
Yeah, the thing about Melania is that it makes the broader market go more risk on, which is the same way I interpret Trump. It's like Robinhood doesn't need Trump to make money on it, but if Trump gets people to start downloading and get back into crypto, that's
I don't know, man. It looks like a lot of the volume was from this Trump coin over the last couple of days, like in this coin alone, which is crazy.
It was the majority of it, but Bitcoin was at 109,000, bro. And Solana was at 290. Like, I mean, like those core assets still pumped, even if it was for a day.
Yeah.
But that's not a sustainable thing for Hood, right? They need that constantly. It's just this is why I think it's getting exciting, because if we are in a crypto bull market for the next 2 quarters, still the same way it was in Q3.
The thing that I really like seeing from this though is it didn't take Robinhood, long to say, okay, yeah, we're going to launch this.
Yeah.
They could have, like Bonk, I think was the most recent thing that they launched. And Bonk's heyday was like 9 months ago, 12 months. It was a long time ago. Not too many people are trading it back and forth. Volume is nothing on that.
Yeah,
so
even
if you're going to have memes on your platform, you need to launch them when they're relevant. And it feels like, with the new administration, not just Robinhood, but all these other crypto platforms are very glad to just go ahead and do that. Add these coins and make them available to people. So very good for Robinhood.
Dude, did you see the comment that Evan posted? You believe what world we're living in, where Evan's stock market news says, I heard some fart coin whales were moving into Trump coin. Like, these are real investments that people like, this is
why we need fart coin on Hood, bro. We fucking at this point, like,
I like the CEO
of syndicate is moving into Trump coin.
I wonder what the EPS of Fartcoin is going to be this quarter. Oh wait.
Okay, so here's a better question. And by the way, I also want to show this. Shout out to Josh who posted this. Hood's now number 62 on the App Store. Like, Dude, it went from like 180 to 62 in 2 days. I mean, that's hundreds of thousands of new users, which is really, really, beneficial for top line growth. Are we in January 2021?
Probably. Well, for the crypto market, yes. Equities, I think, have a much longer tail, and I think that we're going to continue to see those. We'll have pullbacks, of course. I would be surprised if we have another bear market, before, anytime in the next 5 years. Things can happen. Black swan events can happen. Tariff walls could possibly do that. But man, there's so much going for the U.S. economy right now.
That's the thing, right? This is not a lot of people look back to the dot-com bubble, but the dot-com bubble was excitement around the internet. This is everything. There's just so much going on that is all insanely big for the economy and all happening at the exact same time.
Yeah.
So, yeah.
It's the new Roaring 20s. It really is. And we're in 1924. And if that's the case, we have 5 years. So enjoy these 5 years. Crypto markets, I think it is 2021. I think you're right. At some point this year, I think that party, it's not over, long term, but crypto winter will arrive. We'll have to see when it happens. I think this hastens it, but we might be looking at that in the summertime.
Evan said I got a lot of followers in January 2021. How's this month doing, Evan?
Yeah.
Yeah, and I mean, look, again, this is why I think like, dude, Hood's about to push 50, and we were at 38 on last Monday. Like, I think, I don't know. I think the market's getting really excited. This is bigger money coming in. I mean, this is not just retail deciding to get excited for Hood. I think these are institutions. We saw it on CNBC, get some coverage on Friday as well. You got more and more people saying, okay, we see something here with Hood. In fact, let me play that clip from CNBC because that was actually a good clip. And if more money's coming in, if we can create support at 50, I mean, this is going to be a fun year at that point. You're just going to have a lot of momentum.
Yeah, it's an exciting place to be. And the best part is, we Tanner, you're slightly later, but you have a better share price than I do by quite a bit. But I mean, we were buying this, in the single digits or in the low double digits, and it's like 50, and it doesn't look ridiculous to us. This isn't, Amit and I are Palantir bulls, but this isn't like just Palantir where you're like wondering like, okay, is this too fast, too much, too soon?
Yeah.
Yeah. It's awesome. So to get two of these too, Amit.
Well, I talked about this with Jason today on one of our streams. I don't think Robinhood will ever be as expensive as Palantir because Palantir's numbers are relatively unknown. It's really sentiment and people like the story. Hood gives us numbers 2 out of 3 months. There's no way in hell Hood can be egregiously expensive when everyone knows what their earnings are going to look like. Because why would the street give it some crazy multiple on the expectations they'll grow into it when they already know what they're doing in terms of the growth, right?
And Robinhood's risks are very well understood.
Yeah.
Market goes down, Robinhood goes down. What has to happen for Palantir to go down? That is not as clear as what Robinhood is facing. So
Correct.
We're not going to have that type. We should do at the 55-minute mark, because we always do 5 minutes of other stocks at the very end, which sometimes turns to an hour and 5.
Dude, I have to sleep today. We are not doing that hour discussion again.
No, I don't have time.
Just 5 minutes. That's all.
5 minutes.
Of what you guys are thinking about Palantir right now, because I'd love to know from you two experts, because Trump is in.
My thoughts haven't changed. Roy, I don't think your thoughts have changed either.
No, I did sell some. I know that you guys saw that, that. But I still have over 75% of my position. It's first time selling some of the shares. Just for me, it felt prudent to do. If I had a small position, I wouldn't sell at this point. That's just me. And if there's a good dip, I'll take advantage of that and get my position back. If there's not, that's okay too. Buying other names, including Robinhood.
Yeah, I think Trump can be a catalyst, but I think they're going to have good guidance on earnings, and that'll determine pretty much everything for Palantir. This is what CNBC had to say on Friday on Hood.
Kevin, you bought more of this stock, so good on you today.
Listen, we bought this stock last Friday at $40, and it's almost $49 today. So nothing to sneeze at right there. But we think there's a lot more potential for this stock. there's a maturation that's going on within this company. This isn't kids running around trading NFTs on their phone, although that's the infrastructure that's there. They made an acquisition for Trade PMR, which is a custodial platform that a lot of RIAs are using. They're building out education within their site, retirement plans. This is a company that's amazingly growth oriented. And when there's a transfer of generational wealth, it's the folks on Robinhood that are going to be the beneficiaries of that transfer. We really like the stock in our growth.
But Kevin, in all fairness, you've all known this great wealth transfer is going to happen for quite some time. Is this a deregulation play in your mind? The idea with less regulation that this company has more room to grow, more room to expand into new markets and new businesses, like one you just mentioned?
Well, I think that they're going into the right businesses, not sports betting. So deregulation is going to help lots of companies within this space. But you want companies that are growing, and it's a huge, huge market share, and they only need a small portion of it.
All right, Brent, you also own Robinhood. I want to get your take on what Kevin has to say. The idea is that they're growing into the right businesses, and also want to get your take. Do you believe that deregulation, is that a tailwind for this business long term? Of course, again, it seems like the elephant in the room, the inauguration's on Monday.
I mean, I really think the crypto market, specifically around the regulatory framework within crypto. So maybe it's not a deregulation, it's a regulatory framework, which we didn't have before. And so I think that will benefit both Coinbase and Robinhood. But because I think Robinhood has so many more public assets that are like stocks, and they are doing so much, they're giving like money back for IRAs, giving you a bump. I think it actually is going to infringe on Coinbase, and they can both be winners. And so I think the regulatory framework around crypto will be incredibly positive for Robinhood longer term.
Weiss, coming over to you while we're talking about crypto. You made some moves on crypto recently. You actually trimmed some of your crypto positions.
So the suit's kind of agreeing with the thesis there.
Yeah, it's institutions love the stock. They've loved it for a long time. They loved it before IPO. A lot of excitement. There is a pretty potent bear case. I don't know if you guys saw it this week. You want me to share that?
I would love to hear the bear case. Yeah.
Yeah, this I don't know
like
if we
this
can
could be
overcome
fake.
this. Evan's actually the one that ended up
Oh boy.
really providing that for us. But
We survived him. We'll survive him again.
I don't know, man.
You ready, skate daddy? Cover the light round question. I'm going to start with Rafi in Florida. Rafi.
Hey, this is Rafi Sad. Here's Rafi.
Okay, let's
Good
hear it.
evening, the great Jim. I'm thinking about buying Hood for a long-term hold to add to my portfolio. It's close to an all-time high. What do you think?
Kid's got horse sense. I say put half on and then wait for 10% decline. I like his attitude. You.
So I don't know, man. Maybe
Is it
this
really
stock
that
is gonna
bullish? He said buy it and then wait for a 10% decline. Like, is that even bullish?
happen.
know?
It was a little bit less bullish than Kramer can often be, but yeah, man, kiss of death. But at least, like, the silver lining is, if we are wanting to add more to our hood positions, Jim might give us that opportunity. So thank you, Jim.
You know what? What I think is really interesting, and I'm not building on this Jim thing. I'm going to end that here. But really, what I think is interesting is that hopefully a lot of institutional clientele looked at Robinhood the first time whenever it IPO'd. They read the S1. They saw what happened to the stock running into the $80 marks, got interested in it, right? And then the stock went from 80-something dollars down to single digits. And I think a lot of them wrote it off and said, okay, well, this company is kind of gone now. But now they're seeing this is not like it can happen again, or at least I don't believe that it's going to happen to that same degree, because they see the resiliency of whenever that company does get beaten down, goes through controversy, stuff like this, which is not the first time for the business. Obviously, they've been around for a while, but it's the first time in public eye. So what I think is really important is that investors are not only waking up to see that Robinhood is hopefully doing well during bull markets, but that is very conservative and can withstand potential bear markets or worse times in public markets.
Yeah, and I think we've all been pretty honest that if we get a bear market, Hood is the first one to get hit badly. Mm-hmm. And so at least that's how I've been communicating the thesis. And that's why we look at so much macro data to say, all right, are we in a bear market, or is there a big potential for it? And if there's not, outside of a crazy black swan or anything like that, given all the momentum, even a black swan would make a great buy the dip opportunity. Like, it seems like Hood is going to be resilient over the next couple of years. And it's really because Hood is innovating to try to diversify out of just being rooted in market volatility.
It'll be really interesting this time too. If what I predict is somewhat right, it happens occasionally, where we do have an equity bull market for the next 5 years or so, but we enter a crypto winter, maybe this year or early next year.
Right.
Like, how will Robinhood do? I don't. Maybe it'll just stabilize, or because crypto. I mean, it's just they have so many different asset classes. I think 9 now, where they have $100 million run rate. It might even be more now. But crypto is the mammoth right now, especially this coming quarter. So it'll hurt them, but I don't think, unless we get into something like 2022 again, that Robinhood's going to get crushed. And if it does, I have a long-term view, so that's fine.
Let me ask you this question. Go ahead. No, you got it. Go.
I was going to say, Allie in the chat says, where do you think Hood price looks frothy? Well, I find the interesting part is that it's hard to even nail down how much they're going to do this quarter, right? So it looks frothy where it is if you were to take estimates that looked at this company 2 months ago. And now it looks undervalued. And so the price has changed essentially double over the last couple of months in terms of revision. So it's very hard to nail this one down.
Yeah, and analysts, they're all over the place. And it makes sense just because so much can change. And if markets are very risk on this quarter, even with the $45 million settlement that they have, they could post up numbers like they did before. Now, the year-over-year comp is harder, so it's not going to be a 100% revenue growth rate year over year. But 90% of, by the way, the other part too that's really exciting about this, and Vlad highlighted this, I think Jason Wells did too, 90% of their costs are fixed costs. So when things are just thrumming along and it's a massive bull market and it's risk on and they're launching, all these other places, it's not like their costs rise in proportion to that. It's exponential. So hard to say, and it's really tough to value too something that grows 100% at this size year over year, and the next quarter won't be as good, but it's still going to be amazing. It's tough.
Yeah, like frothy to me would be if we hit like $60 tomorrow, or 65 or something. But even then, you got to just see if the growth estimates raise up. But if let's say we hit 50 tomorrow, right? And then we consolidate between 45 and 50 over the next month, which I think would be really healthy. And then over the next couple months, as the growth is still above 30%, you're looking at June, July closing in on $65, $70. I think that's a really healthy trajectory, assuming there's no like crazy crypto movements that would put growth estimates higher. But again, it goes back to the conversation. It can't be like a Palantir that gets expensive based on the perception that they're going to grow, and therefore you get in before they grow because we already see their growth. And if they're not growing, market's just not going to buy Hood. They're going to be like, all right, this is expensive right here because they're not showing the growth. So I think it'll always trade relatively reasonable. 2021 was a different era because interest rates were zero. I think now that we're much more normalized, it won't ever get to the point where it's that frothy.
Do you think just tracking Robinhood to like the revenue or something, in terms of a multiple, that just sort of stays consistent because the markets can only deal with about a month worth of information. They can't let their minds get too out of whack. I mean, it really could only get frothy if people suspect that, going from 2024 to 2026, that the markets in general are going to be much more bullish than they actually are. Mm-hmm. And that if you're really projecting out future growth, but markets aren't. Look at what Wall Street's expecting for Hood. It's like 12% growth, 9% growth or 7% growth or something like this in 2026. It's incredibly bearish. Like they're almost expecting a massive correction. So I think that's already what you're seeing, which kind of puts it closer to fair value, if anything.
Yeah, I think it's, for me, slightly above fair value. If this Friday we get above $54.99, I think it's frothy. I may or may not have $55 covered calls that I sold.
That is fair. That is fair.
And like I said on the Market Madness or whatever, the other stream that we were on, I hope it happens to you. I hope
you want your covered calls to get called away.
No, I will roll them. I'm not.
I'm saying, Tanner, why do you want them to get called away?
So then the stock is above $55 a share for everyone. One man's sacrifice is everyone else's benefit. So I
Don't
hope,
turn me into Tevis.
Roy, if you're the Tevis of Robinhood, everyone, that's what we're hoping for. You'll need to fall on your sword for the benefit of the rest of the community. Thank you for your sacrifice.
You know, I have had to roll Robinhood covered calls once. That's not this allotment or anything, and it was thankfully not very painful at all. And there's one other time when I let some shares go away, and it was like $29, and I'm mad at myself. So I bought those shares back, at a higher price, but I'm like, what am I doing? So I'm being very careful, I think. But the thing is, I sold the covered calls like on Thursday, so it's like the thing is just I have to. I maybe just need to stop selling covered calls in Robinhood right now. The strikes are not even that high. Like, that's a frustrating thing. I think somebody said that they're supposedly coming out with 70s.
Oh, they're out. Their 70s are out.
They're set there right now. Okay, good.
We need.
They weren't when I sold these. I was like, well, I don't see it going to 55 in a short week, but it might. Good problem to have, though. I'd rather have this kind of problem than the perpetual dip that we had in 2022, which was great, in hindsight. But man, bear markets are good teachers. They're not a lot of fun at the time. They're fun a couple of years later.
Yeah. Okay, what do you guys think about? Can we talk about Super Bowl contracts? Do you think we're gonna get? Is that going to be the next rendition of event contracts?
I think they're going to be careful with that. Despite that we're in an era of deregulation, I don't see much impetus to deregulate when it comes to gambling. And I'm guessing that they partnered with whom they did just because there's not any sports contracts on there.
Yeah.
Out of caution, partly just realizing that, hey, if we do too many sports related events or even one, then possibly we're seen as, a gambling, like not just like in the eyes of the public or whatever, but by a state government or even the national government. And that brings a whole host of unwanted regulation to Robinhood. So, but they might. I don't know. Like, I'm not an expert on that side at all. They have experts. That's a great thing about Robinhood. They have the right people in place. So if they do it, that's awesome.
Look, I think it's going to be, rate cut probabilities, CPI predictions, these sort of things that are related to markets and just overall macro. That is where I think they'll get into event contracts to start. I don't think the next one will be Super Bowl, but I wouldn't mind it. I think some of the larger sport events is fine.
Wait,
I don't think
hold
that's
on. What macro event do you think they're gonna create contracts on?
Like I said, Fed cuts, CPI, PPI.
You think that comes before Super Bowl? I think they do Super Bowl before that.
I don't think so. And because of what Roy said, is just because IBKRS doesn't offer that and they offer those. So that's the only reason.
They don't have to go through IBKRS though.
They're doing it.
I'm saying, but Super Bowl, if they wanted to do Super Bowl contracts, I feel like they could, even if IBKRS didn't offer it, they would find a way to.
What do you know?
No,
What do you know?
I think that Super Bowl is the biggest event. Like, Isn't that a no-brainer? There's going to be, that's 150 million people that are watching that event.
Who you been talking to?
Okay, anyway, Dan. I'm just saying, it's pretty freaking obvious that they're going to do Super Bowl, in my opinion. Like, it's hard to imagine they don't do the Super Bowl. Even if that would just be a missed opportunity. They could make $5 million in one weekend if they did Super Bowl.
Yeah, if in the way that Vlad answered, it confused people at first on Investor Day, and then they clarified. His answer didn't mean that they're never going to do sports betting or that they won't consider it at all.
Yeah.
But I will say, if they don't offer the Super Bowl, that might be the right thing, especially with the regulation stuff. But if they don't, that means probably no sports betting for a long time, if ever. Like at least a year, I would expect. Could be wrong.
My thing is this is my prediction. They did election contracts because that has the world's attention. Jay Powell does not have the world's attention, nor does CPI. So although and Vlad did a new podcast, by the way, which is kind of why I'm saying this as well, because he did a TechCrunch podcast, no video, it's audio, and I listened to it last night. And he was talking about this whole idea of like news and markets become part of the culture, yada, yada. And when I hear him say that, I'm like, okay, what's the biggest thing that's part of culture? the freaking Super Bowl, right? Like that has to be the biggest thing that's part. It's not JPOW. It's for us, but it's not going to create millions and millions of contracts for Hood. So I think it's going to be Super Bowl, but who knows? We'll find out in 2 weeks once we get.
If it's not, it's got to be regulation. Like you said, Amit, if they wanted to launch Super Bowl, even though their current partner doesn't have it, they'd find a way to do that.
Yeah. Okay, can we react to this? Because this is a segment I've been wanting to do for a while, but we never got a chance to react to it. But it's at the Investor Day where they're talking about neo-banking and a little bit more than just the credit card. So let's listen to a little bit of this, and I want to get you guys' thoughts.
Banking and how it connects.
Yeah, on the neo-banking, our ambition is to be a top 10 financial institution in the next 10 years across like all credit and banking products. We'll take 10 years to get there. We, on the banking side, have something cooking that is incredible. It would be as like cool as the 3%. We just can't announce it yet. So if you give us a few more months, we're going to talk about it at the Gold event.
That's it. We have something on the banking side that's cooking, that's as good as the 3% cashback, but we can't talk about it at the next Gold event. We will. That is why I'm saying, dude, what if this thing is going nuclear this year? Because what do you think they're going to announce?
I have no clue. I didn't even remember him saying that.
Yeah, let me play it again for everyone, because that part I remembered it last week. I was like, we got to talk about this.
That's crazy.
It'll be difficult for a lot of the income. But let me hand it back to Deepak for neo-banking and how it connects.
Yeah, on the neo-banking, our ambition is to be a top 10 financial institution in the next 10 years across like all credit and banking products. We'll take 10 years to get there. We, on the banking side, have something cooking that is incredible. It would be as like cool as the 3%. We just can't announce it yet. So if you give us a few more months, we're going to talk about it at the Gold event.
And I would just add the one more point. I think second order effects, ecosystem value, that's all great. But we're
Vlad there talks a little bit more about the flywheel and how that. So what do you think? What do you think?
It sounds actually kind of bullish for SoFi. I wonder if they adopt their cyber banking core on that end, and that they offer some sort of, as a neobank without the banking license. I don't know that they're getting a banking license. Like it could be at some point in the future. But that's interesting. The flywheel, his mentioning the flywheel, I don't think it's coincidental either. Like, it's just the more services that are amazing that they offer, or even just fairly decent, the more people that they have coming over to Robinhood and then eventually try one of their other products.
Yeah, I think Doogie Pie is sort of where I was going. I think this is going to be some.
Did you just say Doogie Pie?
It's the name.
That's the best name ever. I just want to say that.
I think that it'll probably be along the lines of some sort of cashback based buy now, pay later. They are looking for credit products that are new, millennial, Gen Z focused. I think that spells buy now, pay later all over it. They've already started to roll that out, so they have interest in it. And he said, like the 3% cash back, I think that it's just giving more than what other institutions. I'll put my money on a cash back buy now, pay later product, which Affirm and PayPal have already announced is possible.
Yeah,
I think that's too boring, though.
3% cash back is whatever. Like, it is boring, but it's
no. 3% cash back is one of the sexiest credit card offerings in the history of humanity.
Buy now, pay later with cash back is the sexiest buy now, pay later product.
Yeah, but not everyone uses buy now, pay later. Everyone uses a credit card.
Well, that's in the United States, not elsewhere. Of course, Robinhood is in the United States, basically. So, but for the UK, that would be a pretty interesting product. I don't know if the UK is the same as the rest of Europe, but Europe uses buy now, pay later. At least this was true a year ago, a good bit more than the United States. Australia, Japan, likewise. But we're heavy on credit cards, a lot more so than the rest of the world.
I don't think it's buy now, pay later. I think it's gonna be something that's super sleek and intuitive. No, I don't have any inside information before you say that. I think it's something with loans, because Roy got that email a while ago where he had would you pay more for gold if we gave you discounted mortgage rates? banking is all about loans and lending, right? He said we have something on the banking side that's cool as 3%, which means it's got to be something that's totally differentiated from the entire market's offerings, which probably means it'll take 5 years to roll out, just like this credit card is taking to roll out. But I think it's going to be something sexy. I just don't know what it is. And yeah,
buy now, pay later is not super. Yeah, I already said that. That's true, but I think that it'll be its own thing. But it wasn't launched whenever we were in Investor Day, by the way. Buy now, pay later in the credit card.
That's true.
But Australia is really the country to look to for whenever you want to know how big buy now, pay later can get. Okay, so they were the pioneers, not America. And it's a much, much higher take. So you can say here in America, buy now, pay later is not all that common because I think it has like a 2 to 3% penetration rate. I think Australia is north of 20. So it's a really big product. I don't know. It'll have to be a credit product, but I don't know if you consider buy now, pay later a lending product, but it is. So I think that it'll be there. I don't think that they'll offer regular personal loans. I don't think that they'll go the SoFi route.
It's harder for them. It's harder for them if they don't have their banking charter. So,
dude, Super Bowl contracts are really easy to predict, and I think it makes sense. This thing, I have no idea how to predict what is a sexy 3% cashback banking offer. Like, no clue what it would look like. But if it's as sexy as 3% cash back, dude, like, could you imagine people start leaving JP Morgan for their banking needs? And they're not getting a banking charter. We know that because that's going to mess up their crypto. So they're not doing that. So I don't know how they finagle their way into still.
Yeah, I really don't know what it is because partnering, they're not going to do mortgages. So partnering with other companies to do mortgages is not new at all. It's innovative for, fintechs, but it's been done a lot.
Yeah.
I don't know. That's very interesting. And when's Gold event?
Probably March. They usually do it in March. So,
okay.
Dude, hopefully they do it in New York. I mean, Vlad said he wants to do SF, but
hopefully New York.
You just don't want to travel.
I don't want to go back. I'm going there in February anyway, so I don't want to go back in March.
All right, just keep a spare room for me, and I'll see you there.
Yeah, I'll see you there. All right, I think that's pretty much it this week, Tanner. We actually we usually end at a full hour, so we do have 15 minutes if you want to bring up another topic. But I don't think I have any more hood news for today.
No, nothing crazy. Honestly, I feel like politics has sort of consumed the market out of its news, and there's been so many days where the market's been closed rather than open that it's just, I feel like it's been slower. Hopefully we're on the tail end of that. But no, man, I'm buying Google, Amazon, and Nvidia right now and telling people to sell Apple. And then Nancy freaking Pelosi, good timing, brother, does exactly that. So absolutely crazy. What a time. What a team, Amit. That was awesome.
And sold Apple.
It doesn't say there, but she sold Apple. 31,600 shares of Apple.
Dude, I'm following you tomorrow and I'm buying Google, Amazon, Nvidia. I'm just doing it. I don't care.
Do it.
I'm doing it.
Nvidia, Google, I'm not going to. I just don't believe in the culture or the leadership. So even though it has a lot going for it, but
I believe in YouTube. I've been meaning to buy Google all year, but I believe in YouTube.
Do you believe in the culture that Google was standing behind Trump? Do you think that they have been doing a lot of things that have been counter what sort of Google culture would necessarily be?
I don't think so.
They told the EU to go stick it. I think they've had a lot of things in terms of fact-checking stuff recently, removing that stuff that they've sort of been on the Mark Zuckerberg following Elon train. I don't know.
It usually takes a little while for somebody, if they do get red pilled or something like that, to shift from very much in favor of one party and working and doing everything you can for that party to, the other side. Usually it's like, well, maybe we'll just back off from this and be kind of neutral, kind of like Amazon, Jeff Bezos. So I think that that's probably more of the reality with Google, is that they, and much like Anthony noted too, where they realize I have my personal conviction and beliefs, which do not align with what I think is in the best interest of the company. So maybe I just keep my mouth shut on this one and donate $1 million to whoever wins the election. Easy way to do it. I don't think that, Zuckerberg, I might believe that. Like, Zuckerberg's been a little bit more outspoken, but yeah, we'll see. I don't think that, at least when Donald Trump was initially elected, like I would say most big tech, well, including Elon, honestly, at that point, really did not appreciate or like or were excited about the Trump administration. Versus now, I think they're pretty excited, just because they saw potentially where the other side could go, like unrealized capital gains. Like that's not going to happen while Nancy Pelosi draws breath, but that's a big one. Corporate income tax being raised instead of lower, like it's just.
Yeah.
And like with fintechs, and Robinhood is swept up in this too. Like, I did a video, really specifically on SoFi, but like that we're shifting into fintech spring, away from fintech winter. And there were some names like Robinhood that just absolutely outperformed and performed well. And it's an amazing company. That's why. Plus, they reverted about the same time as the market did, and did just a lot of smart things. But for the most part, like Spring is emerging just because this change in the administration, the SEC was just so enforcement oriented. Just in the last 2 weeks of the Biden administration and before Gary Gensler resigned, just, lawsuit after lawsuit, fine after fine. I was like, man, there's more of these than I ever remember. And part of it was I normally just don't pay attention unless it has a name that I follow, but there was a flurry at the end. And, it's not that the SEC will never fine or never enforce, but that's just no way to govern. It really isn't. So I think that, the best I'll say is Google's C-suite is probably realizing it's a good thing for their company, what happened. I don't know that they're, clapping or applauding or giving personal money or doing things that would benefit.
Yeah.
Just gonna buy all 3 of them. I'm following her. That's it.
You know what's been my big turning point as an investor since being on YouTube, and I think YouTube has helped having a community to sort of pass ideas by, is to relook at companies more than once. I will take a look at Google. I wrote it off because of the AI concerns that I had, and then continuously being a part of these communities, getting it thrown back in my face. Maybe there's something there, and then I sort of relook at these companies and go, "Oh my gosh, you know what? I missed that. This got way better." The big one for me for Google was the training costs that they had, and the actual cost per query on, Gemini went essentially 1/20th the cost that it was whenever I was bashing them, and in an 18-month period. Give it 18 more months, what's going to happen? This is the thing with AI. It's like everyone's pointing to what the revenue accruing products are. I mean, you could say that about the internet before, but look how many revenue accruing products. So I think you need to sort of put yourself out of those and actually look to the future of where these things are going to be. They're going to replace knowledge-based work. And doesn't mean all jobs are going away. I don't want to get into that. But definitely long Google, long Amazon, long human workforce.
Long Palantir?
Not long Palantir, not at this price. Cool company. Wish I never sold it, but
we tried to tell you.
Let me ask you guys a question. We got like 5 minutes left. Do you think SoFi pumps on earnings, or how do you think?
Yes.
So do you think they reverse the trend from the past 7 quarters and they actually go up on earnings this time?
Yes.
There's no 7-quarter trend. Okay, they go up on earnings sometimes.
No, there is a 7. What are you talking about? Every quarter they go up
Show
a little
me.
bit, and if you just look at the chart, every earnings they go up a little bit in the pre-market and then they tank. Now they recover quickly, but still.
I forget what it is. But if you look there, I think maybe Seeking Alpha does this. One of these data aggregators does it, where it shows you what the price of the company did 1 day and 7 days after reporting earnings. It's a lot red for SoFi, but there are green moments. It's not a 7.
Well, at least the most recent quarters have been pretty bad in terms of.
Yeah, there's one I think out of like 6 or 7 that is different, but all the rest have been that pattern. So I think that there's 2 things different, more than 2 things, but like 2 big things. So one is the macro. Usually heading into earnings, we have weakness. At least this has been the 5th earnings in a row that's been the case, not for SoFi, but for the entire market. There's, the wall of worry that happens. Some legitimate, some, I think are just silly. And I think usually, earnings is uncertain and things have been climbing a lot. So I think part of it is people taking money off the table and maybe having some hedges. And then as we get usually at the midpoint of earnings season, then that reverts. Now, I think we are actually past the reversion. I think that we had that pullback that was healthy a little bit earlier. And then when a couple of things happened, but including banks just posted phenomenal numbers. And there's, we had, CPI, PCI, all report at the same time. Jobs numbers look good. It's like, it's tough to see a concern other than just like, well, the multiples have expanded a little bit. So I'm guessing, unless there's just a lot of like really bad earnings and guidance, and it's hard to see that with the corporate income tax rate being reduced, even with the dollar index being a little bit higher for international companies. So I think that was the dip, and now we're just off to the races again until, typically, maybe March or April, we'll see a pullback. It's the sell in May, go away. It usually happens a little bit earlier these days, it seems like. And I'm not planning to sell in May, but no, I think we'll get another one of these before the next earnings, and it'll keep doing this for a little while. But yeah, for SoFi itself, so we have the macro, and the fact that I think that the dip for the market is kind of over. And the other piece is they've been profitable for an entire year at this point. So there were some bears, including one that Tanner interviewed, nice guy, but just completely wrong, who insisted that SoFi was unprofitable because they hadn't put up a full year of profit yet. It's a silly way, and it's an old-fashioned way to look at a company, and it's a lagging indicator too. But that's the way some of the people in the market look like. And so when they see those 2 things, plus all the things that SoFi is building, the loan platform, the acceleration and growth, for the most part, there are some harder year-over-year comps. But I mean, it's pretty clear SoFi is phenomenally positioned. The macro is favorable, not just for the stock market, but also for lending companies. And banks killed it. Like, look at what banks did and what they said on loans. Like, they killed it. I should do a video on that sometime.
The thing is like, what's this showing?
What?
Just the prices? There's not a comparison between the two or something?
Yeah, the overnight price.
Okay. The only thing that I would add as well is, for SoFi, last year we got killed in Q4 of 2023 because they had to be extremely bearish for 2024 outlook because the overall macro was poor. Okay, or at least it was guided to be very poor. They had something like 5% unemployment, a 2.5% decline in GDP, like just crazy outlooks for the company. But then last quarter, Anthony Noto said this is the best macro they've seen for their company in 7 years. How can they possibly come out with a poor quarter with the same rhetoric? Now, it's a little bit different. We went from 100 basis point cuts expected to 50 basis point cuts. So I hope that doesn't weigh heavily on their guide for 2025, but it's all about the guide. Okay. It's all about the guide. SoFi is going to crush the quarter. Everyone knows this, but what do they expect for 2025?
So here's my question. If the tech platform doesn't grow a ton, is the loan platform where the financial services growth is going to come from?
Dude, it's crazy how big the loan platform business is. Like, yeah. I hope you're giving it the respect that it needs to have.
I'm actually not, and I need to be educated. So can you give me the quick TLDR, both of you, on what is this thing? Like, I know it at a high level, but why is it something everyone should be excited for?
Usually a bank has to give out money based on how much money that they have. But now SoFi is giving out money based on their institutional clients, how much they have. So it essentially gives them an unlimited size of a balance sheet to then lend out to. So they're no longer constrained to total addressable markets. There's no point in calling them a bank because their price to tangible book value means zip. Okay. They can essentially give out as much as they have in members or as much as their bank partners have in capital themselves. So this is why Upstart has such a massive valuation, because they're using other people's money. Well, essentially, without acquiring them, SoFi has just created an Upstart. And so, yeah, when
did this all happen? When did this randomly become
Q3? We had no idea it was happening during Q2. And then all of a sudden, bang, $40 million. Sorry, no, it was more like $63 million additional quarter. And then they said the run rate for next year is something like $400 million new dollars for next year out of nowhere.
And they've announced a couple of one very large through Fortress $1 billion loan securitization, another $235 million, something like that, fairly recently as well this year. There's massive appetite for them, and I was going to throw out that Upstart name. I don't like Upstart at all. As a business, it's won't talk about them too much, but Upstart claims, with their algorithm, with their AI, that they are able to lend in a better way than just the FICO scores indicate. SoFi has time and time again proven that they are incredibly effective lenders, that their write-offs and delinquencies are lower than all the analysts typically expect. That's one of the reasons why they've been bearish on SoFi, is they've been worried about capital constraints. This was an argument from a year ago where they're like, hey, they're pretty near there. They'll have to get a whole lot more assets or sell some loans or something. That's no longer a worry. Second, like they're just absolutely killing it on this front. So they didn't have to acquire anyone. They're just like, hey, we have this ready to go. So that's huge. Now, the tech platform itself, I do have some concerns with it, but with FinTech winter shifting to FinTech spring, that only benefits them. Like we even talked about it. If Robinhood goes the route of some sort of product that they need a cyber banking core without the charter, that's Galileo. There are a couple other providers out there too that maybe they'll go with instead, but Galileo, I think, really is best in class on that front. So I think that's pretty massive.
I have two questions. What is there risk to this loan platform?
Zero.
How's there zero risk?
Because we don't assume any risk. It's the clients that are taking it on.
Yep.
So unlike Upstart, which will share risk, with the institution, SoFi shares zero risk, and they only ever buy the loan after they've already received your money. So there's not even there's no.
How do they get away with that? How do they get away with zero risk?
It's not their loan. They're buying a loan for someone else immediately. They never hold it on their balance sheet.
So
not for a day.
You've not done mortgages yet, but mortgage is an example. Like typically, so when we bought this house, we got a mortgage, and I don't even remember the company it was with, but we had that. They held that loan for 30 days or 60 days or something. Then they sold it to Wells Fargo. So Wells Fargo gives them a percentage of the cut, and so once that transaction part is done, they no longer have any risk. Now with SoFi's product, they're not holding these for even a second. All they're doing is basically sort of vetting the person and just saying, okay, they check out, they're good to go, and they're your client. Here you go. Thank you for your money, and hope it works out for you. If it doesn't, well, that's
so.
On
this is like a referral fee. They're a middleman with this loan platform.
So what's so funny is before Q3, they were doing a referral program and going to companies like Pagaya and saying, here is a client that might be willing to look for a loan. Okay, you guys can take his application and do what you want with it. But now what they're doing is saying, hey, we have a client. We've underwritten him. We're using our proprietary software, our AI, and he's a very, very good borrower. Do you want him? So what's so cool, this is the interesting part of it, is that how does Upstart grow? How did they get these 300% quarter over quarter growth rates that got the market to have these analysts coming on just covering the company without knowing it? And it was the hottest stock in the market. It's because they used, whenever you are using automated AI tools to underwrite people, the only expense that they needed to worry about was sales and marketing to get more people onto the platform to recycle the whole business. Okay.
Right.
SoFi is even better than that. They are now going to have this tool that they can get clients immediately onto the platform to sell loans out without having to cycle their balance sheet at all. But when they're on the platform, they never leave SoFi. So if we're looking, you're going to start seeing only advertisements for SoFi that say personal loans, home loans, student loans, and they're going to get these people who are really hot leads, which are very expensive, advertising customers that need loans right now. But we're going to immediately cover the costs because they're going to be paid for before we even sign those clients up. And then they're already on here. Do you want a credit card? Do you want a checking account? Those are free for SoFi. So unlike Upstart that can only get customers for loans, SoFi has them for the rest of their product suite for free. It's insane how differentiated the loan platform business made SoFi. It literally changed the business model. It's going to change. It literally changed the way institutions valued them. It's why the stock doubled. It went from $8 to $16 because of this change.
And this isn't SoFi Weekly, but look what analysts are expecting for EPS this coming year. Compare it when the guidance comes out for SoFi. They're going to be wildly different. It's not going to be close. Now, tech platform, I have some concerns, but they have a lot of tailwinds on it. So, but even without that, like my base case for SoFi is tech platform goes nowhere this year, which I don't think is going to be the case. But if it does, my base case for SoFi is it gets to 25.
What is the potential? Are you worried at all that there's a lack of moat on this loan platform, that the middleman gets cut out, or not really an issue?
No, that's where all the moat lies.
There's so much demand, and I think, I mean, their success as far as delinquency rates and write-offs, like just write-offs is the wrong term, using credit cards, but they speak for themselves. I mean, it just and they show like the loan vintage slide, like that's one of those key slides to really understand SoFi and its success. This isn't just a fluke. This isn't just a one quarter thing. They have quarter after quarter after quarter demonstrated superiority in this area, and at some point, eventually the market will just start maybe they don't, but they should just say, okay, it's been, like years of them outperforming and years of their guidance and outperforming that. Maybe we should just give them a little bit of credit, and they haven't yet. So there's a lot of upside there. So
is this their AIP moment, Roy? You think so?
I mean, no, that would be the tech platform if that really takes off. I mean, for me, like, here's where I am with SoFi. This is going to be an amazing year. I have a lot of options. I have a good number of shares too. My options are actually, because of I bought most of them when it was $6 and $7. They're much larger than my actual shares. If the tech platform accelerates like I think it could, I'm about 60, 65% sure that it will. So that's not super confident. Then there's a lot more upside beyond that. A lot of high revenue, a lot of growth. And the macro shifted so that it should perform very, very well this year. I don't think this quarter will be the quarter. I think that we'll start to see that upswing really all the way through the year. This feels like the 13% year-over-year growth for Palantir as far as like the tech platform moment, where it just keeps going up. And Tanner and Tevis are telling me, oh, it's growing this slow. I'm like, dude, what matters is the trajectory. This matters a lot, especially for this kind of business-to-business client in this tech industry. So I think that we see that. And if that's the case, then I'm not going to sell all those leaps. I will sell some, but I'm just going to use that and get some $10 shares in 2026 or 2027.
Eric in the chat said, no, this is their boot camp moment. What I would actually say is that this is their AIP moment. What Roy is saying, the Galileo part, will be their boot camp moment, where they have the product, which is the loan platform business, and learning how to sell it will be through all of their Galileo clients. Because right now they're here for card programs. But who's to say, hey, you guys want to get into loans? All right, bring their applications to us. We'll underwrite them and sell them back to you. That is where I think that their actual boot camp moment happens. And then their customers expand tenfold. That's the real end game here. Which is what's crazy is if you go back to the 2001 investor presentations with SoFi, Anthony Noto was talking about this product back then. Like, this is not something that they've had in their mind. the only reason why they didn't want to push out more referral-based products earlier is because they got a banking license and they needed to build a balance sheet over the last 2 years. So it took a pause. But now they have a full balance sheet. They're not looking to grow it. They have it, and they are going to now build externally.
All right. Well,
we'll have to see. We've got a weekly show to cover just this.
Yeah. Well, I hope SoFi earnings reverses the trend because I think they're a good company. They deserve it. They just have to have that moment where the street's like, all right, it's time to stop treating them the way we treated them.
Can I share one Robinhood thing and we end on possibly?
Yes.
So you guys are familiar with this, the Robinhood Investor Index?
We are.
Okay. So I was not paying attention because I was on vacation and I got back and I'm like, hey, there's a nice uptick here relatively recently. And we, of course, saw what happened in the middle of that risk-on environment that Robinhood Index actually outperformed the NASDAQ. I'm curious what you guys think. Do you think this year, the Robinhood, this index here, will actually surpass the NASDAQ as far as gains? Also, I want to show you this, Amit, in case you hadn't seen it. Palantir's right there.
I did see that last week. It's really cool. Palantir's a top 10 holding now. Yeah, I don't know. I mean, I was surprised we didn't outperform the S&P last year. I think that GameStop AMC part of the top 10 holdings was holding it down. And also Disney and Ford are in the top 10. I don't know how Disney and Ford are there. Once those get kicked out, we get some other good names, and hopefully GameStop eventually, is not there. Then I think we should be able to outperform.
I actually have been buying GameStop. So
you've been buying GameStop?
It's a swing, but yeah.
This guy. Well, they have 4 billion.
I think I know Roy. The next day, he does something crazy.
Yeah.
They have 4 billion in cash. If they announce something legit,
Yeah. Basically, at this price range, just buying them and then selling covered calls. And if they get called away, fine. That's just what I'm doing. Not a massive position, and it's only swing funds. It's not something long term. If I lose mine on it, it's not the end of the world. So, but doing it on Robinhood, so funneling more money over to Robinhood.
If you guys want a little source for lending companies to know their potential for the next quarters, look up UMI. It's the Upstart Macro Index. It's a really quick and easy way to know if lending companies are going to beat their earnings. And it's doing very well. The closer to zero or negative to zero means that these lenders like Lending Club, Upstart, and SoFi are going to do much better, the better. And UMI is showing that, by the way, greatly.
Can you send me the link to that in our DMs?
Yeah, sure.
Speaking of Palantir, by the way, they're at 73.35 after hours or overnight. Robinhood's at 49.50.
Got to get to 50.
Dude, I don't know. I don't know if we bust through it tomorrow or it kind of just chills out in the 47, 49 range. I guess
as long as it's not above 54.99.
As long as it's not at 55.
Sorry, this is the macro index. So the closer down to zero, the better. So things were good at the end of 2021, and then it started getting real bad, and now it's starting to really improve. That's all. I can send this over.
Yeah. So buy 500 shares of SoFi before earnings is what you're saying.
That is not what I'm saying. Do your own things. No financial advice.
Feels like that's what you're telling me.
Thank you for the financial advice, Tanner.
Thank you, Tanner. Appreciate it.
Well, I'm in Canada, so good luck chasing me. But
hey, 51st state, so it's coming.
I was gonna say I'm gonna get locked up whenever you guys absorb us.
All right. That's it for Hood Weekly. Look, it's been exciting. 7 weeks. Robinhood is growing up in front of our eyes. And obviously the stock is doing. I had a meetup over the weekend in New York, and I met a lot of people that got early at $14, $15. Basically the same time Tanner got in. They've done very well. Very, very well. So it's one of those stocks that's changing people's lives. And if they keep executing, I think the market will reward them. And this could be a really big year for Robinhood long term as well.
I knew if I bought it, then it's no, I'm kidding. I held skills for a really long time and lost a lot of money. So don't listen to me.
I've lost so many plays too. It's nice to get them right. And, that's a nice thing about the market is if, you can be wrong and everybody's wrong from time to time. But if you get, semi-good at identifying quality companies, even if you're not great on like timing your entries and all that. And I'm certainly not. And you just buy those quality companies and you hold them, and you're right more often than you're not. Like you might lose, 30% in a play here and 40% there, but then you get one like Robinhood, right? And it's like, okay, it's a 5x, it's an 8x, it's a 10x.
Yeah,
it's awesome. The market, it's a wonderful vehicle.
Yeah, it benefits long players. I can't believe anyone that plays short. I find it very interesting. I think they do it for more than gains. I think it's honestly a vanity thing.
Yes, I agree.
Yeah,
I agree. All right, that's it for us. Thank you, everybody. We'll see you back next week on Robinhood Weekly. Bye, everyone.
Bye, guys.
Have a good one.
Thank you all.